morning, class. Welcome to Homeroom with Unc and Market Monk. Morning, P. How's your week?
Hi, it just kept it pretty light. I had mostly just MSTR all week. Just was that was really good on the option side, and just had a lot of follow through Friday. I mean, more than I expected, so I ended up in that one twice. But was just looking this 300 to 317 area, and then I was saying that Max Payne's 310. It's too early in the day for that, so it's probably going to just float past that and ended up at like 340 or something like that stock does. But yeah, I saw some people on that, so I was happy with that. And yeah, just kind of scaling into solar and batteries, oil, a couple other things. So a lot of maintenance last week more than just day trading.
Yeah, I was gonna say it's part of trading, but setting a lot of alerts last week more than anything. Market was still decent. A lot more kind of watching too, getting back into the level two, being at the screens a little bit more. Um, Full disclosure, that Nvidia trade, man, I had to be careful on taxes, lack of better terms, and I just stopped really with the momentum trading and swing trading. So I'm gonna try to get back in a little bit into momentum trading now that I cleared the first of the year and I got a pretty big window to fill again. I'm not unless I sell a lot of Tesla this year, which I don't think I will. I'll have some room in the taxes. So yeah. I mean that was the first thing to cut out from me. So back into that, but caught first 2 days of that. I got all these 35, 40%. There's one is 126% runner, and they're a dollar 45 cents, dollar 50, somewhere in that range. Just shitty bio Left for Dead company. So not a lot out there for that yet. Dropped one on Friday in my room, but yeah, I like what I see. But a lot more maintenance this week, like you said. That's a great way to put it. Setting a lot more alerts, taking more notes than actually trading, both in and out.
Absolutely, and I mean it was kind of funny that we did the New Year's thing, and then a lot of those had a great day the next day. So it was like
Yeah, we did all right.
First Solar and Celsius, come to mind. Like Celsius just had a great week, and it's I mean it's I'll just say it's nice to enter that and have that down here. There's a lot of people pretty severely bagged on that thing, and luckily they're way above where we are now. So I don't think there's any real you're not going to run into bag holders. I don't even know the numbers. I know it's not $28 though. So,
Oh yeah. That's our.
45 or
Well, I
50 or
mean,
something like that.
that's
So,
one of them charts that are new in the game. That was a great first pick. But yeah, it's
yeah,
new. I mean, it's new in the game. It's where support's at. I mean, but yeah, you're not. I mean, you're not going. The thing is, you might go to 20 here, but you're also you're two times
yeah,
as likely to go to 40, 45. So yeah, just a great play, especially when the FUD stops. I like the buying into FUD. I don't like the buying the dip. I think that's a bad way. I mean, because what's a dip? I mean, you're seeing it with Tesla
yeah.
right now. You probably won't be wrong because it's Tesla, but you take that mentality, some stupid shit, and it ain't gonna work. But I like buying the FUD. I like buying Hindi. Those are good buys for me. And
Blocks. I mean, just
yeah,
yeah, the first short report I ever read was SOS. That's the first one I ever read, and so then I started trying, figuring out what it is they're doing. And I mean, when you follow those guys, and there's a couple like Hindenburg's like kind of the big dog with this, but
yes,
then there's smaller accounts that do the same stuff, and then they'll fight with each other about who was first and whatever. But I mean, it's just funny the victory laps they'll do. So if Roblox were to drop 8% tomorrow, they would do a victory lap on that, even though they were short, below 36, which is like the place where you buy the damn thing. And so there's a lot of that. And yeah, Hindenburg, they just got they got on Carvana again, and I mean Carvana, I can't really do much with that up here, but it just sort of brings back memories of
Did you
I bought into FUD on Carvana too,
did
way
you
back when.
did you have a spot for, you have a spot for Carvana? You don't have one? Like where you're like,
I do.
all right. I'm
It's
just
still
curious what it is.
yeah. So it if I, when I look at the flow on it, basically it's like 140, 130, something like that. But the thing is, it went so far, it might be a little above that we catch like 170. But those are the numbers that show up in option flow most regularly.
Yeah, 136, 25 auto RTL on the
Ah,
daily.
there you go. Yeah,
If that doesn't
yeah,
catch though, P,
that's
like
right.
I wouldn't go full there, but if that doesn't catch, it's the 100 psych. Um, the thing about it is you
Yeah,
don't,
yeah, that's right.
Carvana, you're not going to buy and hold to the moon. You're just going to start playing this range like you did with MSTR, you do with MDB, stuff like that. When it gets to a consolidation level, you just play
Oh yeah,
the bounces.
I mean the retraces are so good on those, and Carvana, the so the advantage like stocks like MDB have is that the IV is low, the float is small, and the IV stays low even as the stock gets pretty volatile. Carvana, you're dealing with sky high IV at all times, and that is fine. I mean, one thing it means you can trade out of the money and be okay. So you can trade it cheaper, but you're just not going to hold it as long. You hold it about. I mean, I won't go into all the math on it, but you hold it for about a fourth of the amount of time that I would an MDB contract. Just everything moves faster, so it decays faster. It's you got to be wrong faster, whereas MDB at some of our spots, you can kind of scale in, and I don't really mind holding two or three of those contracts and just
Shares.
waiting a little bit for the move.
Shares.
But yeah, I mean, oh sure, yeah, that too, right. But anyway, yeah, I think Carvana, I probably would be shares only, for this
Okay.
reason I just talked about. But
Is
yeah,
is my perception right? This is a flat brain. I don't trade options question. Is my perception right that like when you have a heavy downtrend or any, I guess just a heavy trend, Carvana's a great example. It's a downtrend, but when you have a heavy trend like that going and it just levels out, do you like here, like let's say you bought like 180 calls and it just kind of levels out at 177, 179. Are those calls gonna, do they like gain money because the trend stops? I don't know how else to say that. But do you go like back up when it
uh,
starts to hold a level?
no, they um a little bit when you get a kind of a surge in demand in the contracts, but that's more important than anything. I mean, what the movement slowing down is actually bad.
Okay.
You don't want that. So you need kind of aggressive reversals, and the bet. So on a smaller time frame, it's why like when LLY flushes hard, um, the bounce you get is people panic selling the calls, and so it just keeps shoving the bid down and down and down, and then you get a fill any kind of bounce at all. Your best gain is in that you know 15 minutes. After that, it finds a little bit of equilibrium, and then if it slow crawls up all day, you're not gaining much, and you get to a point where the contracts actually start to lose some value because the hype is dead. So so
Okay.
stability is bad. Um, you want that like that knee jerk reversal. That's why I say you don't hold them as long, because you catch that big oversold flush, and the bounce up 5% in half an hour is way better than the slow climb
Then a
to
five,
15%.
yeah,
If
then
you don't buy if you don't buy time, if you buy lots of time, it's a different thing. But if you're in even a monthly on that one, it's starting to slow down. It's not going to help you at all.
that's interesting. Now that comment right there explains a lot why shares are weird to people that come from options, because when you have a flush and maybe a little higher low consolidation, I mean, I'm talking like a 2% higher low off of that bounce. You want it to sit there for a half hour, 45 minutes. That's the best thing in the world. I mean, that's where you can accumulate some shares. You know,
Yeah,
you
yeah.
want the buying demand to continue to come in. Um, so yeah, it's just interesting. I thought there would be like a relief from the stopping of the bleeding or the stopping of the run, and it sounds like that's not a thing. It sounds like those contracts almost double hate when you stop the momentum. Our contracts in general hate when you stop the momentum.
And it's the actually the explanation in my notes for why um, puts a short expiration and I say calls with time, because I want to be able to weather that, because it's a the contracts themselves try to kind of find a sort of equilibrium. So when you start to buy them, you're going to see some pretty goofy premiums as it hits a pivot and consolidates underneath it. And I want to just be able to not really care about that and have end phase contracts 3 months out or something. Whereas in the extent to which I'm a momentum trader is actually when it's going down, and it's because when it's above a pivot, it tends to really accelerate to just go ahead and hit that and get it out of the way, and then we figure out where we're going from there.
Perfect, perfect. Um, Wanted to talk about inflation and the market, because it seems like it kind of is what it is on the inflation. Um, it's not been a big topic, but the market has to catch up, and that's bullish, right? Adding you know 20% entrenched inflation over the last 4 or 5 years. It's got to be pretty bullish for stocks. I just want to get your thoughts on that, and how much do you think that's really fed into the bull market?
I think I think significantly. I mean um, the economics stress that people have. I mean it's a lot of like being a wage worker with no assets. It's
Yes,
kind of always not the best situation,
yes,
but in these conditions, it keeps getting worse. And on the flip side, assets um, are really strong. And I mean, and then stocks, especially. And then I mean, to me, the
Hey,
most
don't get the
interesting thing about
remote.
inflation is
I
I'm
got him.
just I think copper has not is lagging in this. Usually, it's leading, but I think that it's pulled back into like the $4 area, um, as the market starts to kind of absorb the not the inflation narrative, which is what was happening before, but the actual reality of it. Um, that stuff kind of has to go up, I think, pretty significantly, and that's sort of the story the flow tells and all that. That's why I keep talking about aluminum and steel and everything.
Yeah,
And steel, the timing of this U.S. Steel thing and the pullback there is kind of interesting to me because it just sort of seems like an opportunity for whales to start to load up on that one.
I'm a I'm a union guy, wife's a teacher. So I mean, all the stuff I'm gonna say to you know, because you're a teacher. You've been a teacher your career, but the way things work
Yeah,
is we're supposed to have this 2% inflation, and most jobs, like your paycheck or your union or whatever, is gonna give you a 3% what they call cola. It's not Coca Cola. It's the cost of living increase, and that's what they do. And that's supposed to basically give you 1% more
yeah,
every year, so you pan out ahead. um, in general, that got all fucked up because of the just the inflation, and we kind of already had problems with $15 minimum wage workers and stuff that was just kind of causing inflated things. But we really got it after the COVID spike. So this 20% that we got has to be worked into assets because assets are supposed to outpace inflation. Like the market, you're supposed to be able to take your savings and put 10% in, or excuse me, get 10% out of every year. That was kind of the theory when it, and in the 80s when you'd set up a little account, they'd make you a mutual fund. You get your 7 to 10% a year on whatever you put in there, and you just keep stacking and call it a day. So the market assets are gonna win. People with money are gonna. I mean, if you're gonna complain about a rich guy's got stocks, so he's gonna win in the long run. And that whatever inflation is, the value of a dollar is just gonna be transferred over. So if you take it to an extreme, let's just say like you used to be able to get something for $1 and now it's two, and everything across the boards like that. Your $100,000 car we always talk about now is $200,000. The stocks are going to emulate that, if not exceed that. And that's going to, I mean, I've never dealt with it in my life. We haven't had inflation like this since, I believe, the 70s or early 80s, whatever that was with the gas embargo crap. But you're going to see that trickle in through time and manifest out. And I don't know how fast it is, but it's definitely a good reason to continue into 2025. Sorry for the long winded P.
Oh, I agree, and I think the inflation trade, the consensus inflation trade that people kept trying to do, was that inflation numbers are going to be bad, so I'm going to short the market. I'm going to short this data, and it didn't work. It hasn't worked in 2 years, and I think we're at a point now where it's not so much data releases or anything like that, but I just think the market just having to account for the reality of it, I think is something that yeah, I do agree with that.
Yeah, no, that's why I stay on a name like Red Robin so much, is because I think they will figure it out. And I've seen it with Funko early on. Like these companies, they're not big, but they do make decent money and they can pull pretty good margins. And that margins are now going to be inflated by 20% just because of the how the world is. So, um, yeah, I like. I just think there's a lot left in stories with that um, that haven't gotten the increase. That I mean, because that's not going to be penny for penny across every stock. You know what I mean? Or it's not every stock 1% at a time. You're going to get it's when they do move. I think that's when it's finally going to be taken into consideration, and I think that's again why I like the B's and C's so much is just because they haven't really got the increase as the rest of the market. Um, like we've seen it with the what tobacco airline. Like look at airlines. I mean, don't search the group on when I was talking about airlines, but they just haven't stopped. So I think whatever movement they had, they're also taking that into consideration as well. So
Yeah, makes sense.
perfect. You said you want to talk about crypto.
So get into the real. Um, okay, so I had said I was like 92 to 96, um, and that was sort of my little.
You've been good
I was
with
like,
me.
we're gonna be here a little while, and it it did that around the new year and everything. Um, 92 bounced really hard. Kind of see it on the 4 hour chart here, and I mean, so to me, I think the 100K test is kind of imminent, and then leading up to Trump and all that. I mean, we could get another run, hit all time high, something like that. But I think we're the 100K area is gonna stay relevant. I don't see us breaking down into the 80s or anything like that. So I do think there's some opportunities there with some of the miners, but I still believe that there's miners you want, miners you don't. I mean, I've been
Oh,
calling that for a
always,
while, and so
always.
so even as some of the ones that you don't have a couple good days, they're still the most likely to just give it all back. when crypto has a bad couple days. I mean, some of them bled way the hell out. Even as we just, I mean, Bitcoin was fine this whole time. This is nothing like 92 to 96, 98. I mean, that's fairly normal for Bitcoin. So that that consolidation can continue to kill a lot of those. So to me, what they need is either your crypto services, your coins, hoods, and Square, etc., or you're a miner that has another angle to them. That you are a data center, you have AI, stories going on. So the ones that get news and that get good news, um, those are the ones that I think are going to perform the best. Your Hive and IREN, stuff like that, and the ones that if the extent of your news is about how many coins you're mining and hash rates and shit like that, that doesn't really do much for those stocks. You can say that projects into all this future value, but we've talked about it with mining. Mining's only going to get more difficult. It's only going to be harder to make money. If that's the only thing that you're doing, uh, those stocks are going to lose in the long run. So there's some range there, but I don't think they're going to hold their. So long story short, uh, winners and losers, and I think we already know the winners. So I think those are the ones you stay on.
Nice, nice. I crypto kind of fits though what I talked about is the Momo trading or scalp trading that I was trying to avoid the last couple months of the year. So for me, it was just the bigger theses over there, the BTDRs and stuff like that, bigger theses. Um, but I
Mm-hmm.
never really leave the sector. And I'm uh, the longer we're there and we go on, I'm just a firm believer. Like you can't really trade a certain chart. You got to wait for Bitcoin to have some movement and find the chart that's on a level. Or just play level bounces. And we've had levels on a lot of Mara 17, Hive 302. There's a bunch of levels that you can just play on. But for me, they're all that momentum trading versus holding. And I think the only winners over there at this point in time for me, P, are the ones that go the alto route. I want to say, excuse me, MSTR, but I don't want people to get confused because it's in a similar sector. But companies that completely go a different way, like which one of these guys is going to be an AI data center? That's what I need to know because that's the only future I see in the mining side of it. The squares, the hoods, the coins, we've kind of already separated those, and they're going to continue. But these guys, a lot of them, um, they're getting harder to trade. That's the best way I could say it.
And so the people. It seems like there's a lot of people in CLSK and
Yeah,
it's like the $17 and above area, and they had a chance to get out. And they just kept everything, or that's the story they're telling. Got to separate that. But you know, you talk about hard to trade. The idea of being bagged on these things, and then thinking that, well, not only am I going to recover that, but it's going to go up 50% more. I mean, if those things couldn't do that when Bitcoin was $108,000, what's
yeah,
it going to take?
yeah,
What do you need? You need 120, 150, 200. And I mean, people could search the group. I said we aren't talking 120. I said that when Bitcoin was $107,000. I'm like, you'll notice Unc and I aren't talking 120. And then, we had this pullback after that, and it's like, well, now I'm interested in them again, and it started last week, and I'll be on them, some more. But you have to look at how they respond to Bitcoin's movement is is everything. If Bitcoin's up 3% and a miner is up 5%, that's not enough. I mean, if Bitcoin has a monster day, you want to see that miner up 10, 12, 15. And then when Bitcoin pulls back, if Bitcoin pulls back 1% and your miner's down 7%, you know, that's a big red flag. And so they clearly do that. And so I think the people who are already in them, they tend to ignore or dismiss what they're actually seeing. So I'm with you that if you can just like kind of start fresh and not have a lot of these miners, and when you're trading them, or you have them, if you had CLSK way back when we bought it, you don't give a shit about any of this really with whatever you have left. But to be bagged in those and then looking at the movement is a much different thing than to just go at it fresh and find something on a level and trade that. So yeah, we're gonna be in that mode for sure. But much different kind of trade than oil or steel or some of the other stuff we're in.
And if you got any CLSK left from when we was talking about it, you need to come talk to me. Um, that's number one. That's number one. Um, I forgot what I was going to say about it. You caught me off guard on that one. I had something, but oh yeah. So kind of a little Twitter rant for you. That price ad, we didn't talk about it too much. We should have called that out on site. We did in the group, but the price action thing, man, I had to go look at that. And you get these guys talking about price action. Um, price action, I had to go make sure I got the legal definition of it, so I wasn't confused when I relay it what I thought it was. But it's even more past tense than I thought. But it's just candle structure, so you can figure out where the price was. But it's looking backwards. It's not like you go watch price action as it happens. That's not what you do. It's looking backwards at candle structure. So why are you trading things like CLSK that are an apparent downtrend? This is the main point, people. Write this down. Why are you trading thing in a downtrend currently? Like, why would you trade something that, if you look on it on the year, is currently in a downtrend in this kind of a market? Why would you do that? I mean, trade something sideways or in an uptrend. That's what you want to trade right now. There's plenty of charts. And if you just erase the name up top and take that into consideration, is this chart in an uptrend? Is it consolidating sideways on the bigger time frame? Or are we in a downtrend? And just don't trade downtrend charts right now. Wait for some consolidation. If you watch voice chat, you spend an hour and a half with me every flipping week. I say it all the time. I need like 6 candles. It's a month and a half. I mean, figure it out, people. All right. But yeah, price action. Get the fuck out of here. Sorry, P.
So
Sorry, P.
basically, the word action is a gambling word too. So I think that it kind of, the reason they're misusing that term is because to them, like, I'm looking for action, and so like they associate that word with the present instead of
Yeah,
instead of
yeah.
the past. So
I
think
mean,
that's part of where that
I
comes
do
from.
say watch level 2, which I guess that's watching the
Mhm.
action of the price currently, but that's not what price action really means, because you're supposed to go back and do
Yeah,
the analysis of it. Um, yeah, no, and get off. You can't really do that on a minute chart either. That's another part, but I could bitch about them all day and the charts they throw. Uh, Shout out to that chart I already found, posted in the main chat. I don't think I'm finding a worse chart than that in 2025. I should pull that up. That was a good one. Um, I see you got some bonds and some silver coming across my screen. Let's go there, because
yeah. So
Pet
yeah, I
Rock's
wanted to
meh.
touch on those, and I'll talk about the 10-year first, because it relates to something like, so they're when they talk about price action, like, and what's affecting it, and all of, and the don't chase calls thing, like a lot of the don't chase calls, and why I say it more now than I usually do, is because of the short term trend on the 10-year. It's the This is a pop and fade setup for stocks. When this is moving up like this, you're just not really going to hold your gains. A lot of times, pre-market's going to define, you know, most of the range you're going to work with. I mean, it kind of always does, but to break to the upside and hold it, is not usually going to happen. And this is where it might happen one day a week or 2 days a week, and so there are 3 bad days, 2 good days. It's sort of the setup I'm anticipating when I see this like this. So it's just I'm a little more careful with upside. I kind of prefer let the stocks flush or catch that secondary move. But it's the worst time to try to catch an initial move up on something and buy into it and think you're going to make any money. I mean, especially with options. You get um, that demand in the first 20 minutes, and then the premiums just collapse after that. So be very careful as long as this thing's going up. And also, I mean, it could pull way back, and then we could just have a monster week. That's also kind of what I'm looking for. So when I see this start to break down, I'll be looking for that as well. The mechanics of why this is and all of that very complicated to me, but it is a chart I follow, and I think especially relevant if you're an options trader. So just keep an eye on that.
Yeah, no,
Silver.
I've been trying to follow that TA
Oh,
side
go ahead. Yeah.
since you've been mentioning it. Um, I must, like I said, I always have CSNBC on in the background, and they talk about it constantly. So I think you're onto something there.
Yeah. Yeah, and so and to me, it's sort of it just kind of define. It's like it's when you're playing sports. It's the weather.
It's like the wind. That's
This
what I was
will
gonna
put
say. Is
a
it the
lightning
wind?
delay.
Is it the wind?
Yeah, right. Yeah, so it's you want to account for it. I mean, yeah, the wind. If you're a golfer, I mean, it's you know it doesn't affect how good of a golfer you are, but it affects what club you pick. I think sometimes the wind's in your face or behind you or
Yeah.
sideways or whatever.
Hey,
So
everything affects you as a golfer, and if it would stop, I'd be a really good golfer.
yeah, yeah, right. So the one I want to get to real quick is I want to get to your talk about uranium and but like notice these candles have no wicks. That's part of like the why this is so goofy. You don't get the active
Oh yeah,
trading data on these
you
things.
get
It's sort of
solid candle structure.
yeah,
Talking
yeah,
about a
yeah.
high and a low. Yeah, yeah, that is
Um,
weird.
right, but the little the bounce, the 70, being there were a lot of buyers at 70, and then we find out about it and whatever. Like that that there could be something there, and I think this is a chart that you don't really need this to go to the moon to trade uranium, as
No,
we've seen. We've had people making money on uranium all the way down here, but I do think that it's potentially setting up to make a nice move into the 80s, 80 to 90, something like that. So um, the flow seems to be positioned in that way. But if you want to trade uranium, I think there's two ways to do it. Um, some precision on some levels and smalls,
mm-hmm.
or
That's the way.
a bigger trade over time, thinking about April, June, whatever. Or you do both. You keep some, and because I do think we're going to get a significant move up, but also you can trade some pretty reliable range on a lot of those names too.
Yeah, yeah. Say like a stock is like $5 and 35 cents or something like that, and you set an alert and you just kind of buy it there,
Mm-hmm.
and then it runs to like let's say like 630 or something, or maybe 575. You just keep the percentage. If you bought 100 shares, you put 500 in there. You just keep 10. And for me, that's kind of how you trade Bitcoin. Except for Bitcoin, I let it all go. And here I'm okay with keeping some free shares and rinsing and repeating, always staying in a position. Because yeah, those charts are great. That's just theoretical. There's no chart out there that's 535 or anything like that. Don't.
Yeah. Well, because the flow on that theoretical chart might consistently be at 7, 9, 12.
Yeah, yeah,
At various expirations. So you trade that range within the back of your mind. You're like, I know that flow is still there,
yeah.
but
So you
I'm
just
gonna
keep. And
just
the
fill my
easiest way,
cup
the
too.
most stress free way I could say it is whatever you're up, just keep that percent. I mean, because that chart could theoretically run to
Mm-hmm.
646. I'm just going to random number 646. It could run there, and then you're up, a good
Yeah.
25%. And if you do that, twice even, then you got half a position for free versus getting washed around. So for me, always, if you're like, all right, I'm gonna sell, the
Yeah.
easiest way is just to take half off the table or just keep your percent if you go free. Um, again, you're going to learn a little bit about your emotions, which one works better for you. But then the re-entry's always available in those both of those situations. So
Silver, I'm really liking what I'm seeing here. I just, I sort of, I mean, if it had revisited 27, 28, that's fine, whatever. For me, for like a kind of 36 breakout to happen, it's not going to happen from, from 27. I mean, to me, it happens from building up here and, staying around 30, 32, and then breaking out from there. So that's where the flow on the charts says they think that's what's going to happen. So I think there's still a lot of opportunity in silver, and I think some patience will pay off there. Um,
but best thing about silver for
China,
me, best thing. Go ahead. Is it silver related?
oh, the yeah, so China and silver, like that's a news item that's going to be around, and
Okay.
I'll get into that for the people in the group. But there's some stuff there, and then silver is part of making solar panels and lots of other electronics. That's what differentiates silver from gold. Gold is used in making electronics too, but to a much smaller
Smaller
extent.
degree. Um, for me, I
Yeah,
love this because this silver is when I first started kind of like oil. I watched happen. Silver was like, all right, I'm gonna follow this the whole story. And 26 has always been the number. And I love that you don't like go in there, or I don't have to go in there and like rechart this thing or ever look at it. I just have an overall thesis from a bigger picture. And so now, I mean, if you just put that in story mode, well, we used to talk about, man, we just need to get through 26 here. We just need to get through 26, and now you're in your general conversation, you're saying that 27, 28, which is just showing strength off that level, consolidation on a bigger move in a commodity, and you want to talk about taking some time. Like these shouldn't run 40% in a year, right? This should be your 15, maybe 17% is a huge year in this commodity. So watching it build above a level that you established probably 2 years ago, I would say, as being important. It was just music to my ears the whole time because I'm more of the longer player on these charts. I want them to set up on my level. There be a big divergence in the chart, and and the commodity continue to hold a higher low. So yeah, buy silver when it's in the 20s, and especially when you're on a good TA level. And I think you're going to be fine here. The move back into the 30s should happen with relative ease on any kind of news, in my opinion. PRP. So love this chart.
absolutely. Yep. And copper. I
Two
mean,
lines. Okay.
fairly fairly simple. Yeah. So this, I mean, yeah, I have two lines that the most. I got back into copper on. I was like the middle of the zone. I was like, I want to see this hold up, and so I bought copper stocks when they were just all along the middle here, and then obviously had that breakout, and so as we pulled back, holding $4 a few times now, is pretty, is significant to me. And as I see, those charts kind of set up, I still, for whatever reason, I mean, aluminum looks better than the copper stocks, um, but they're both very much related to this chart. And so I think there's a kind of opportunity to load up here, and option flow from right now being in January, it's April and it's June. that's what matters. And maybe 1 month before or 1 month after, depending on the stock. But those, those two, and for a swing trade, both have to be there. I have to see the activity in April. I have to see the activity in June, how they complement each other. For a stock that's leaps only, I wouldn't want commodities to be leaps only. Uh, if QuantumScape is leaps only, that's fine. That's a different kind of thing. I need to see the story. There has to be that we're going to move here, establish, and we're going to roll to this other spot that we already are starting to build, and then that'll carry us through the summer. So that's the setup I look at. And if you see it in any copper, aluminum, and collabs, it's probably going to have those two expirations with it. So that's what I'm looking at here.
Yeah, it's a harder one for me to follow, but man, do you nail that every time. I play aluminum. We know aluminum. I do like the one copper chart on the 100 cyc there, but yeah, I don't have much on copper. It's a
Yeah,
pretty complex commodity.
last oil, uh, good shape here. I mean, I like TA side. I don't know what to say. For me, just the 68, not dipping below that for very long or sustaining a move down there. This is just this whole consolidation is just a lot of manipulation to me, and I don't use that as people use that as a term to whine about being bagged on something. It's all manipulated, right? But
Sure.
just oil, it's just sort of been holding all the Russia stuff that's been going on for years. But yeah, just a lot of like stability and good levels and everything in oil stocks, and even in this consolidation, to me, I mean, one of the reasons I like a couple of the ones that I do is that I think they're oversold for these conditions, and so like I think they can just sort of pop back up to a sort of equilibrium and then make a move with the sector from there. So you can kind of get ahead on a couple of those names as the larger move back to the 90s sets up. So that's what I'm looking at for.
Yeah, the flat oil prices isn't necessarily a bad thing. Every oil company has a level where they're profitable, and I guarantee you they all can be profitable in the 70s. Obviously, in the 90s, they're more profitable. It's the instability of prices that really mess with those guys because they can't plan. So I think it's been a great market for them um, to set up for the move. 90's a little high though, P. I do think we push 80 just on a TA side. If we push 90, we're gonna have $5 gas again. Um, but yeah, I think second most manipulated commodity to only natural gas.
Really, yeah. And my 90 idea is the fall. So that's so we're talking like 9 months from now. But that is what I think will happen.
Yeah, I mean, if you really want to be an
And
oil trader, I would figure out like which I mean, if it's flat, if oil's just 65 or $75 the rest of the year, the companies know how to manage that. But which ones can be profitable in a $75 environment? Separate your winners and losers that way, because some of them need it to be. So some of them are fine as long as it's above 60, and some of them do need it to be $72, or they start really hurting their profit. So that's why I bought COP, because I think that no matter what the price of oil is, they're like the U.S. dollar, right? Like they just control everything. It doesn't matter what the price of oil is for them. They have too big a market share. So
this is where like some sector differentiation is going to matter a lot. Pipelines, equipment, midstream exploration, like um, geography, West Africa, for example. Like so that's where I start to get into that part of it. And when if I'm posting flow for oil and it's Exxon, COP, CVX, Oxy, that's different than all of a sudden there's a bunch of tankers or there's pipelines or whatever. So there's definitely uh, there's something about the situation driving which stocks within that sector I'm looking at. So uh, the two ways to do that, I think you can just see the ticker name and the levels and just trade that. But if you want to know the bigger story of what's going on, I'm always happy to talk to people about that too, because it's a sector where I guess at this point like I have the most experience in that sector, just because it was where I first went when I started getting into this.
Yeah, no, I like oil. I think it's in a midweek. Man, they're running to it. I mean, out the gate, first of the year, they were
Mm-hmm.
running to it. So,
Yeah,
um,
right.
good,
Yeah,
good to be
yeah,
early
and that's
there.
part of, like the energy trade. That's my big theme for this year anyway. So obviously, oil's a big part of that.
Yeah, I'm glad I got cop early there. I've never really had a position in there, and it's good growth for me. Good growth for me.
Oh yeah,
I mean,
I
that stock
I
might not
tried to
be
talk.
shit.
I tried to talk you into cop, but it was more expensive when I was talking about it. So,
Well,
yeah, you get a good
that's how you
estimate.
are, P. That's how you are, man. I know.
Um, yeah, yeah. And then real quick, last one before SPY, lithium. I mean, obviously you look at that and you're like, good God. But let's just get into this part here.
But
Um,
I love those
yeah,
charts.
I mean lithium.
The charts are great.
Yeah, yeah,
I mean,
yeah, yeah. $10. I mean,
yeah,
you know, anything around there, you're set up. I mean, lithium's gonna be 14, 15, 18, 20. Just a question of how long. So there's a lot of good opportunities there. I like batteries more right now, but I do think lithium stocks
well,
be
they have a better
fun to
story.
look at.
The
Mhm.
the battery tech. I think what don't you have a better? What doesn't need battery to not innovate, but to take the next step? And I think I mentioned it last week with the robot gun dog is a joke, but I mean, eh, I, this is what I wanted to say to you, P. I've been waiting all week to say this one. Remember when we was kids, and like when you was small, like you had a runny nose and stuff, and on Christmas you opened that race car and it was bright red in a box. It had that big plastic front cover with the remote control right there, and you took it out, and that remote
Right.
control had a wire to it to the car. You remember them days?
Right. Yeah. 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 Yeah.
Yeah, we ain't doing
Yeah.
that.
That's the
We're
one
not.
from Radio Shack. Yeah.
Yeah, we're not
Yeah.
doing
Yeah.
that. We're not doing that. So we got to have batteries. It's got to have batteries. So yeah, if you're not from my generation, you
Right.
do not
Well,
remember
then,
the remote control car with the wire hanging out all the way to it. You had to chase that thing around. It got wrapped under the table. Yeah, no batteries, please.
yeah, right, and that was the thing that as a parent, make sure you have the batteries on hand that you're going to need for
Yeah,
all the toys and
yeah.
whatever, and they came with batteries that lasted like 20 minutes or like I mean hell I remember like a Game Boy, the battery life. You're talking like you get 3 hours out of it. You're not
Mm-hmm.
even going to get a road trip if you didn't bring extra batteries out of those things. But so yeah, battery technology has not kept up with other technological innovations. So anyone who talks about being able to make big advancements in batteries, I mean that's going to be a huge mover of that sector.
Because it
So
covers multiple
totally with you there.
industries. I mean, it covers everything's from
Yeah,
yeah,
right.
just anything needs that tech. So Um, yeah, man, we had to walk around with
Yeah, I mean if you
our music with a cable to a box with the box with the batteries in it, and it might skip if you bumped it too hard. Y'all don't know the struggle.
right, yeah, yeah.
um,
But if you want a future where the drone is going to deliver your Taco Bell, um,
batteries.
that for that thing to fly all day, it needs battery technology.
Yeah,
Absolutely.
and not D's, not double D Duracell copper tops. It
Oh,
needs it needs
right.
this
Yeah.
lightweight lithium thing. Did you ever get anything that needed like 8D
Yep.
batteries? Or you had to put 8D
Uh,
batteries in it.
yeah, no, I did. I mean, yeah, I think I did. There were a couple things.
You're like, what?
Yeah.
Like when your parents didn't read that part when they bought it.
Yeah,
Yeah,
exactly right. Yeah.
exactly. Let's talk general market. We're dumping spy predictions. I just
Yep.
think there's not much use in them. We're good at it. We're close. But I'm going to still talk candle structure
Yeah.
and you talk flow around that. And then just maybe more move to general market. Um, yeah. I'll let you lead the way there, though, because you're good at talking about general market stuff.
Getting January 17th out of the way. There's just so much dead open interest in SPY and everything else. Because that was, I mean, that was a leap. The leap from 2 years ago is that date, and that was actually a big topic with MSTR, where you've got all these options that are up 10,000% that people bought 2 years ago. Like what happens when people exercise it or whatever. But for SPY, I mean, obviously we're trading, in the 400s, that people bought stuff back then, and it's just dead. They were old hedges and stuff like that. So the contracts that are relevant to me right now are like June 545, and over time, I've seen. I guess my screen's up. Like this March 540p has moved down and down and down and down, and so it's like, well, okay, that's we're actually getting a little too close for that one. So we're going to kick the can down the road, and it's going to be, a little bit of a strike higher. And so as I try to read that contract does not tell me that we're going to pull all the way back to 545 anytime soon, but that within the next month, or 3 weeks or whatever, that yeah, I mean, you could see 580 show up. So it is kind of a little bit of a bearish setup. This contract sold off some, but it had been heavily ask side. And when I saw this, uh, a couple weeks ago, was where I started. I'm like, okay, I'm going to start trading and buying SQQQ, and it was based on this. So this is the primary thing that I'm watching, and so I'm still leaning a little bit bearish in the sense that we're going to have more bad days than good days over the next couple weeks. That's just so how I see it right now.
No, and I think you called it a 3-to-2 ratio last week in one of the sessions we did. Um,
Yeah,
and I think that was a
yeah,
spot on analysis. Um, Candle structure, real quick. You can see 580 on that first big gnarly candle down, and then we've had two really strange green candles. But 580 is kind of the line in the sand on a short term basis. If you go to any time frames, that's probably going to be it. And then 6 on the top, which is going to turn into resistance in my opinion. Um, I'm looking for the pullbacks and then the levels to hold versus breaking down levels on a lot of things this first couple weeks, just to see if, I mean, we did that last year as well, but this year, I don't I'm expecting those levels to hold, so probably gonna be buying a little more off these higher lows for me, because I don't think we break down on this chart much below 580 this month. But I think 600 is a problem. You get the strong rejections, and you kind of wash around there. It's a $20 range, um, but yeah, um, again, I like the 3 down 2 up analysis. It's just in that 3 down 2 up on regular charts, you want to see your levels really hold. Um, I would just walk away from anything that breaks down on a level and check into it more on a weekly basis. And when I say breakdown, I'm talking like, I mean, you got to know the range of the chart, but that's a 5 to 10% usually. When that starts to let go, you'll know. Rejecting on the first text test back, which I think you're going to see in SPY here a lot. You're going to get to that 604, 602, and it's just going to die.
And then I think a comment you made earlier is relevant. If there's a semiconductor stock that's in a downtrend and can't break out of that downtrend, that's not the one you want. I much prefer ARM and Dell, ones that like I have a level like Dell under 120. I'm like, okay, I'm just going to buy under here, and then it gets over 120, I'll sell most of it. Keep doing that rather than saying like, oh, everyone hates this one. It's oversold, so I'm just gonna buy it because those three and two, the three are going to be worse than everybody else, and the two are not going to be as good as everybody else. So the three down are bad to a greater extent, and then the two up are not going to recover what the three down did. Whereas with others, it's the opposite of that. You bleed out a bit, and then you get it all back in one day. Those are the better ones to be in.
100%. 100%. Yeah, no, I'll double down on that. Like again, just erase the ticker. look at the
Yeah,
look at the weekly or at
right.
least the daily. But I would go to the weekly. Take 2024 and do it. And if it looks like it's in a downtrend, don't play it. I'll let you play a sideways chart, and you can play the uptrend charts. But if it's just been in a downtrend, if it had not had a good year last year, just you'll have time. Trust me. And there's better fish currently. Perfect. Got any final here, P?
No, I'm just kind of contemplating how to handle my morning notes. The less I the less I cover, the better it goes. That seems to be the thing. So, just gonna keep thinking about that.
It's still a year behind me in some things, P.
Yeah, right.
Perfect. You ready to get to work?
Yeah, that's it.
Perfect. Like and subscribe. Link somewhere, people.